Dear students, I hope you are all doing well. Let me welcome you all to Module 8, which is about equity recognition and owner financing. The first problem we would like to look at is this one. Question 3 on this document, identifying and analyzing financial statement effects of dividends. So we have some information here. And then the following transactions, among others, occurred during the fiscal year ended March 31, 2020. And here, the stockholders' equity of the Francesco Company at March 31, 2019 is shown below. So this is at March 31, 2019. And after that, and up to March 31, 2020, these were the transactions. Use a financial statement effects template to indicate the effects of these separate transactions. The first one, declare and pay preferred dividends of $340,000. So when a company pays dividends in cash, it will reduce our cash, which is on the asset side. And in the note, it says use negative signs with answers when appropriate. So it will reduce cash. So write down negative $340,000. Now we know the asset side must equal to the liabilities and shareholders' equity side. Contributed capital and earned capital, these two are shareholders' equity. Now, when a company pays dividends, it also reduces the retained earnings, which is part of earned capital. So I will also reduce earned capital by the same amount. So it does not have any effect on income statement. The next transaction is April 15, 2019, declare and pay common dividends of $1.10 per share. Now it is giving us in terms of per share. So we have to find out the total dividends. So total dividends will be for April 15, 2019. Total dividends will be $1.10 multiplied by the number of shares, common dividends. So we have to find out number of common shares outstanding. So common stock, $1 par value, 3 million shares authorized, but the company has issued only 700,000 shares and outstanding. So 700,000, which will be $770,000. So because dividends are paid, so that will also reduce the cash. Same way, it will also reduce the earned capital. No effect on income statement. October 1, 2019, execute a 3-for-1 stock split of the common stock when the stock price was $119 per share. So 3-for-1 stock split. So that basically means one stock will be divided into 3. So the number of shares of common stock will increase and proportionately price per share will decrease, but it doesn't have any effect on the financial statements. So no effect on October 1. Now, March 1, 2020, declare and pay common dividends of 0.3 per share. So March 1. So total dividends will be 30 cents per share, and we have to find out the number of shares. And it is common dividends. So common shares originally was 700,000 shares. But remember, we also splitted the shares into 3. So that basically means 700,000 times 3. So our total will be 630,000. It will reduce our cash, and it will also reduce our earned capital. No effect on the income statement. Now part B, at March 31, the company reported net income for the year. Compute retained earnings as of March 31, 2020. So this one was our part A. Now for part B, and this is question 3. So in your case, the question numbers might be different. This numbering is with respect to this document. So we have to find out for part B, we have to find out retained earnings. So retained earnings as of March 31, 2020. So that will be equal to our retained earnings as of March 31, 2019. And then we'll add the net income during the year, and then subtracts any dividends paid. So our retained earnings as of March 31, 2019 were this number. And then our net income is this number. Okay. And then our dividends will be sum total of all these dividends that we recorded on the balance sheet. So 340. So $48,815,446. So that's the end of question 3. Let's move on to the next question. Question 4. Understanding EPS calculation. On its Form 10-K for the year ended December 31st, 2015, Bank of America Corporation reported information related to basic earnings per share. Fill in the missing information. Round answer A to 2 decimal places. Okay. Answer A. So you have to find out basic earnings per share. So basic earnings per share is equal to and in short it is called EPS. Earnings per share is EPS. So this is equal to your net income minus dividends on preferred stock divided by weighted average number of common shares standing during the year. So net income minus dividends on preferred stock divided by weighted average number of common shares outstanding during the year. So you can understand that basic EPS is actually based on common stock. That is why you are subtracting the dividends on the preferred stock so that we arrive at the amount that is attributable to the common stockholders only, and then divide by the common shares outstanding. So our A will be, so our net income minus preferred stock dividends, net income applicable to common stockholders is this amount, so which is already calculated. So you can verify this here. So 17,486 minus the preferred stock dividends, 1483, 16,003, right? So we have this amount. Now all we need to do is divide by the average common shares outstanding. So it says dollar in millions except per share amounts. Okay. So these are in millions. So you have to divide by. So you have to convert this into millions. So it will be 10.46282. So 10.46282. So 1,529.59. 2 decimal places. So there is a decimal actually here. So what I have to do, it will be 0.10462. Let me recalculate this amount. So 16,003 divided by, so there is a decimal, I couldn't see this decimal. So when you convert this into million, it will be then divided by 0.010462282. Making some mistakes here in millions. So these are in millions. Let me, this 3. Oh, I see. Except per share amount. So this is also in million actually. So my bad, I'll go back. Except for per share accounts, except for this amount. So 16,003 divided by 10,462.282. So 1.53. We finally got it. So 1.53. So again, all we did was we took this amount and then divide by average common shares outstanding, which is 1.53. Okay. For part B, C and D to the nearest million. Okay. So this is our B and this is our C. And common shares outstanding, basic earnings per share. So what we can do, we can find out net common applicable to common shareholders. So that means C first. So our C will be, if you look at the formula, if we take average common shares outstanding multiplied by earnings per share, then we'll be left with net income minus dividends and preferred stock, which basically means this C. Net income applicable to common shareholders. So let us do that. This number multiplied by to the nearest million, so it will be 3474. Now to find out this amount, we know we need to take net income, subtract 3,474. So our B will be subtract what we just calculated. $1,359. So B, C, and D, we have to find out net income. So we have already seen net income is the sum total of these two. So D will be this plus this. Now for part E, we have to find out average common shares outstanding. So if we take this amount and then divide by basic earnings per share, that should give us average common shares outstanding. So if you look into this formula, we need to find out average common shares outstanding, this denominator. So what we can do, we can swap this denominator on the right-hand side with this numerator on the left-hand side. And in this case, our numerator on the right-hand side is just our net income applicable to common shareholders. So it will be our net income applicable to common shareholders divided by our basic earnings per share. E is 3 decimal place. So it will be 83. I'll write down here. So this is our question 4. End of question 4. Let us move on to the next problem, which will be question 5. So in question 5, distinguishing between common stock and additional paid-in capital. So we have some information about shareholders' equity in millions except par value. So let's see what it says. for the 34,517 million reported as common stock and additional paid-in capital. So this amount, common stock and additional paid-in capital. What portion is common stock and what portion is additional paid-in capital? So the common stock part, so the common stock part is equal to your par value times number of shares outstanding. So our par value is this amount multiplied by so we have par value 20,000 shares authorized, shares issued and outstanding at July 31, 2016, July 25, 2015 respectively. So we have only 1 year of data. So I will assume this is for 2016. So 2,807 shares in millions. So 2,807 million. So let me do it again. 2,807. So 2.807 million. Round to the nearest million, which will be 3 million. So I'll write down here 3 million. And additional paid-in capital is the difference between this total amount and the common stock amount. So you have to subtract 3 million from here. So which will be 34,514. So that is easy. Now, Cisco's stock price was $30.53 on July 29, 2016. The closest trading day to fiscal year determines Cisco's market capitalization that day. To the nearest million, enter answers in millions. Okay, so market capitalization is market price per share times number of common shares outstanding. So in other words, market capitalization is the market value of common stock. So market price per share is $30.53, and the number of common shares outstanding 2,807. Million. So which will be 85,698 million to the nearest million. So that was also not bad. So that is the end of question 5. Now let me move on to the next question, which will be question 8. Okay. So question 8 is telling us determining cash dividends to preferred and common shareholders. Sinclair Company has outstanding 24,000 shares of $50 par value, 6% cumulative preferred stock, and 60,000 shares of $10 par value common stock. So we have preferred stock and common stock. The company declares and pays cash dividends amounting to $168,000. If there are no preferred dividends in arrears, how much in total dividends and in dividends per share does Sinclair pay to each class of stock? So for preferred shareholders, total dividends will be dividends per share multiplied by number of preferred shares outstanding. So which will be dividends per share for preferred stock will be the par value per share times the dividend rate, which is 6%, so 0.06. So that will give us our dividends per share. And then we have to multiply by number of preferred shares outstanding, which is 24,000. So our par value is, it tells us $50. $72,000. Now dividends per share will be total dividends divided by number of preferred shares outstanding. So which will be $72,000 divided by 24,000 shares. So which will be $3 per share. So I'll write down 3. Now, the company declares and pays cash dividends amounting to $168,000. So the remaining will go to common shareholders. So for common, it will be total dividends will be 168,000 minus our common stock dividends, which is 72,000. $96,000. And dividends per share is, as before, total dividend divided by number of common shares outstanding. So 96,000 divided by common shares outstanding is 60,000. So 1.6. So first of all, 96,000 here, and then here, 1.6. 96, 1.6. So that was our part A. So for part B, if there are 1 year's dividends in arrears on the preferred stock, so that basically means preferred stockholders were not paid dividends in the last year. How much in total dividends and in dividends per share does Sinclair pay? Now, remember or note that in the question, it says 6% cumulative. So cumulative basically means dividends in arrears on the preferred stock must be paid before any dividends are paid to the common stockholders. So in the first year, we already calculated that the annual dividend for preferred stockholders total is 72,000. So for preferred, dividends will be 72,000, but that is for 1 year multiplied by 2 because there was 1 years of dividends in our year. So which will be 144,000. And dividends per share, in short DPS, is equal to 144,000 divided by number of shares, which is 24,000. So which will be 6. And for common, so total dividends will be, as before, total dividends paid during the year, 168,000. Subtract the total dividends paid on preferred stockholders, which is 144,000. So which will be So 24,000. 8 minus 144. 24,000. And dividends per share, in short DPS, will be 4,000 divided by our number of common stock shares, 60,000. So which will be 0.4. So 40 cents per share. So let me now write these numbers down. First, preferred total dividends, 144,000. And then dividends per share is 6. Common is 24,000. And the dividends per share is 40 cents. So that is the end of question 8. Let me move on to the next question, which will be question 10. So question 10, analyzing and interpreting equity accounts and comprehensive income. We have consolidated statement of stockholders' equity. How many shares of common stock did Procter & Gamble issue when convertible Class A preferred stock was converted during fiscal year ended June 30, 2019? So how many shares of common stock? So it is talking about the number of shares. So these are the shares outstanding. Procter & Gamble issue when convertible Class A preferred stock was converted. So let's see what information we have. We started the year with these many shares. And then we have treasury stock purchases. We have employee stock plan, and then preferred stock conversion. So this is the amount. So this question is more about interpreting, identifying and interpreting the information correctly. So I'll just write down 6,029. Preferred stock conversion. These many shares of preferred stock were converted into common shares. Dollars in millions, shares in thousands. These are in thousands. Question, next question, at what average price were the preferred shares converted? So this is how many shares and what was the average price. So now if you look into the amount, so we have preferred stock decreasing by 51 million because they were replaced with common stock. And then our additional paid in capital, and then our treasury stock. So treasury stock is recorded when a company repurchases or buys back shares from its shareholders. So, and when that happens, it has a negative balance. For example, in this column, it is a negative 69,828. Now, when and that company can uses its balance in treasury stock to resell those shares. So when new shares are sold from treasury stock, then its balance decreases. So that's what you see for the preferred stock conversion. This $43 million was positive, which means that it decreased the negative balance of treasury stock. Remember, treasury stock starts with a negative balance whenever there is shares repurchased by the company. And it is recorded at the original cost. The difference is recorded under paid in capital. So the total is 8 plus 43, which is 51. So for our second part of A, so I'll write down question 10. Average price will be our $43 plus 8, 51. We can directly write down this 51. So that was in million divided by number of shares, 6,029. This is in thousand. So in fact, it basically means that 6.029. So 51 divided by 6.029. 2 decimal place, so 8.46. Okay. So that is our part A. Now for part B, how many shares did the company issue for employee stock plans? 72,454. So that is easy. I can copy this and paste here. At what average price were the common shares issued to employees? So let's see. So employee, this is the number of shares. In this case, again, what happened? Our treasury stock balance decreased, the negative balance decreased by this amount. So this company actually used the shares that were repurchased to resell them. In this case, issue them to employee. So it decreased the negative balance of treasury stock. So these and the difference between the original cost and repurchased and the issue price is recorded under additional paid in capital. So I was saying again that these are the cost. So what I'm going to do for B, average price will be our 121 and 4,915. So I'll write down 4,915 plus 121. Divided by number of shares. So These are in millions and these are in thousands, so it will be 72.454. Two decimal place. So 69.51. Now part C. The company reported basic EPS, earnings per share, of $1.82 for the year. The company's stock price on June 28, 2019, the closest day before the fiscal year end, was $142.55. Calculate the dividend payout and dividend yield ratios. So dividend payout ratio in percent, dividend yield in percent to one decimal place. So dividend payout ratio. So dividend payout ratio is equal to common stock dividends per share divided by basic EPS. So common stock dividends per share, you have to find out. So dividends, 2.8975. Divided by our basic EPS, $1.82. So which will be $1.59, and it is talking about in percent, so it will be 159.2%. And dividend yield, so dividend yield formula is share divided by current share price. In percent, it will be 2.0%, so just 2%. Now for D, how many shares of stock did PG repurchase during the year? So let's see. So treasury stock purchase, so 69,828. Let's remove the negative or parenthesis. At what average price per share? So again, average price per share. So that was the number of shares in 1,000. And this was the cost. So this is our part D. Million. $69,828 because this is in 1,000. Round to 2 decimal place, 93.14. Compute the company's market cap. So as before, market cap is equal to market price per share, which we have here 142.55 times number of shares outstanding. So balance June 30, 2019 is this much. Shares in 1,000. So 1,000 multiplied by 142.55. So it is asking in terms of million. So it will be 337 nearest million. Seven. And the next question is, what is the market to book ratio? So market to book ratio is equal to market price per share divided by book value per share. Because we are dividing both the numerator and denominator by the number of shares outstanding, we can actually write this as also market cap divided by total equity or book value of common stock. Common stock. So market cap, we already calculated this much divided by our stockholders' equity, 45,988. So $7.77, 2 decimal place. So that's the end of this question and also the end of this lecture video. I hope this is helpful for you. So that's all for today. Take care. Bye.